If you look at the US-Iran conflict in West Asia, its impact is now much more under control, but the danger is not yet over. Trump being what he is, anything can happen at any time during these 60 days. But for the present, things are certainly looking better, more hopeful. Global markets and the Indian markets reflect that. The first shock of 1973 and the second shock of 1979 did result in the government, Indian government. The Bombay High was an outcome of the first oil shock. But in the case of crude oil, we are not even, producing more crude oil. We are producing less crude oil than we were doing 10 years ago.
Cryogenic engine and the supercomputers were denied to India, and we learned to build it. Do you think we're seeing the same thing again?
Well, I think it's not the same thing. Technology seems to have been weaponized by governments.
Hello and welcome to Macro Matters, Business Standard's fortnightly conversation on the forces shaping India's economy, politics, and place in the world. I am Ankur Bharadwaj, and for the record, we're recording this episode on Thursday, June 18th, 2026. Over the last few weeks, two very different stories have dominated global discussions. One is the easing of tensions between the United States and Iran, which has important implications for oil prices and economies around the world. The other is the growing debate around artificial intelligence, who controls it, who gets access to it, and whether government should regulate it before it becomes too powerful. At first glance, these stories seem unrelated, but perhaps they are connected by a larger question: who controls the future? For decades, power was shaped by control over energy. Today, technology and artificial intelligence are increasingly becoming strategic assets in much the same way. To help us make sense of that changing world, I'm joined once again by A.K. Bhattacharya, whose writing and analysis have helped explain the intersection of economics, policy, and politics in India for decades. AKB, welcome to Macro Matters.
Thank you, Ankur, for having me here.
AKB, let's start with the developments in West Asia between the United States and Iran. For the last few weeks, it did seem that situation could escalate into something much more dangerous. The world reacted to it, oil markets reacted to it, global economies reacted to it. It does seem today that things are in a much calmer position. Would you agree?
Well, yes, the world is in a calmer position. The markets reflect that, even though the expectation that the Fed would probably listen to the US President Donald Trump's diktat that interest rates should be brought down, that did not happen, may have queered the pitch for the US markets, at least for some time. But I think if you look at the US-Iran conflict in West Asia, its impact is now much more under control. But the danger is not yet over.
So how significant do you think has this de-escalation been?
Well, there was this fear that this tension, this conflict will go on for a few more weeks. At least some people even said that it might go on for a few more months. It had its own implications, not just globally. And as we have discussed on this show earlier, that 20% of the global oil flows through the Strait of Hormuz, which was the bottleneck. Now it seems that things will become normal, but not immediately. You have 60 days of negotiations, although they're saying that the flow of oil through the Strait of Hormuz will get normalized as soon as possible. We have to see how it actually plays out. Trump being what he is, anything can happen at any time during these 60 days. But for the present, things are certainly looking better, more hopeful, and the global markets and the Indian markets reflect that.
Well, Indians in general don't follow developments in West Asia, including the war, directly. They follow them indirectly, and it starts with the pump prices. It starts with inflation. It starts with the availability of LPG cylinders. But for India as a country, as an economy in general, would it be fair to say that whenever something goes wrong in West Asia, we immediately get concerned about three things: oil, inflation, and the rupee,
And the government's fisc.
the most important factor?
So what happens is, what happened this time is the oil prices were not allowed to be raised, at least as long as the elections were not completed. They were raised in the month of May in 4 installments. The government even cut the special additional excise duty and incurred a hit on its fisc of almost around 1 lakh crore in an annualized basis. But it meant that the consumers did not pay higher crude oil, retail petrol and diesel price for some more time. Now the oil sector was impacted from that point of view. There was the problem about fertilizer. Fertilizer prices have gone up, and the subsidy bill was clearly not good enough. The estimate is that the subsidy bill will double from 1.7 lakh crore to it will go up to 3.4 lakh crore. At least this is the minimum. Now all those fears are subsiding. The oil price, which had crossed 100, has now come down to closer to 80, 83, and it looks that it will come down further. Because after all, remember, the global situation on oil is very, very healthy. The consumption of fossil fuel has come down, even though because many economies have switched over to alternative fuels. So I would not be surprised if Brent crude oil at least does not come down further and hover at around the level that prevailed before February 28th.
But this wasn't India's first oil shock. So we've seen this picture before. How vulnerable do you think India is now compared to how it was, let's say, in 1991 or 2008 or to 2022 to an oil shock? Have we become more resilient, or has the basic vulnerability remained unchanged?
Well, the story has changed over time. The first shock of 1973 and the second shock of 1979 did result in the Indian government, take up exploration in a big way. The Bombay High was an outcome of the first oil shock. And believe it or not, India's oil import dependence had come down to almost 60% around that time. But as in the Indian economy liberalized, even the new exploration licensing policies were put in place. The private sector was allowed to explore. But we saw something strange happening. If you look at the last 10, 12 years, you will see that our import dependence on crude oil has gone up from around 83% to 90%. Our dependence on gas has gone up from around 40% to 55%. Now, this does not mean that we are not producing more gas. We are producing more gas, but we are consuming more gas also. But in the case of crude oil, we are not even, producing more crude oil. We are producing less crude oil than we were doing 10 years ago.
Bombay High has dried up.
So the question that my fear is that, yes, oil shocks in the past have driven us to policy action. And at the same time, in the last 15, 20 years, what we have seen is that whenever oil prices come down, we once again become complacent. So my current now fear is that now that oil prices are coming down again to 70, maybe $65 a barrel, we should not become complacent. The time is not to let another energy shock hit you 10 years later, but time now is to take necessary corrective steps so that we don't have to face another shock in the same way as we did this time.
When oil prices rise sharply, what is the chain reaction? Can you take our viewers step by step through this process? For example, oil rises, inflation goes up, transport cost goes up.
There are many layered impact. The first impact is that your cost of importing a fuel on which you are dependent to the tune of 90%, that goes up. Now, our retail prices are on paper free, but they are actually not free, because the bulk of the oil that we sell in the domestic markets are controlled by state-controlled companies. They're listed companies, mind you, but they are state-controlled. So what happens? The government nudges them, says, listen, don't raise prices immediately. I will help you recoup the losses later, or I will subsidize you. So the under recovery, or the gap between the cost of refining that crude oil and the retail price which the oil companies recover from the market, from consumers like you and me, increases. So the under recovery for example, petrol in the last few months ago had gone up to around 25 rupees a litre. For diesel, it was almost 100 rupees per litre. Now that has come down a little, as petrol, as we know, it is only 3 rupees. Diesel has come down to around 25 rupees or so. The question is that this impacts the government's financial situation as well as the oil companies' financial performance. That is a second layer of impact. The third layer of impact is because your demand for dollar goes up for buying this crude oil, your rupee gets impacted. So the rupee starts depreciating. And the third thing is that your current account deficit, which is essentially the gap between what you are exporting and what you are importing, increases. So the current account deficit, which was around supposed to be around 0.9% of GDP, was expected to go up to 2% of GDP. Now, it's a huge increase. So that is the external sector impact. And then, of course, there are other impact down the line, the fertilizer subsidy, because the fertilizer is largely produced with the use of petroleum products. So that means that the government's fertilizer subsidy bill goes up. And since the government of India is little reluctant to pass on the full impact of fertilizer prices to the farmers, even though there is a large-scale diversion, even though there is tools available at the hands of the government to disburse this subsidy on the basis of landholding of a farmer, because everything is mapped now. Every farmer's landholding is known to the government, because we have got the PM Kisan scheme going on, where the money gets transferred to the digital direct benefit transfer scheme. So in spite of that, I don't think we have moved to a system in which the subsidy is transferred to the farmer directly. It goes to the fertilizer companies. And then there's a large-scale diversion. Neighboring countries like Nepal and Bangladesh benefit as a result. So that's another problem. And finally, I would say what happens is the overall cost of production goes up. Large number of plywood industry, petrochemical industry, plastic industry, ceramic tiles, paints industry, every industry and the MSME sector, they are affected. So jobs become a problem. So there is a vicious circle that gets created when the oil price goes up. So this is a problem that we must take on, handle, resolve without losing any time.
Where does rupee come into the picture? Because everybody hears this statement that if oil prices go up, it affects the currency in some way, but most people don't understand the mechanism of it.
So what happens is that we have got dollar through our exports. That dollar comes to the Reserve Bank of India, it is parked there, and the Reserve Bank of India uses that money in whatever manner it deems fit. Now, the question is, when we want to import oil, then we need the dollar. Now, when there is a mismatch in the supply and demand of dollar, when there is greater demand for dollar to buy the same quantity of oil at a higher price, which is a higher dollar, and then the problem gets complicated when there is an outflow of dollar on account of foreign investors pulling out their money. When I'm talking about foreign investors pulling out money, I'm including both direct investors as well as the portfolio investors. So when that happens, now this was a classic case where the two coincided, where you had the foreign institutional investors pulling out money because the US market was giving them higher interest rates, and the foreign direct investors were bringing in gross, they were $90 billion of money was coming in, but a lot of Indian investors were also taking their money out, and the existing foreign investors were disinvesting and repatriating their profits abroad. So the net foreign direct investment was very marginal, maybe $7 billion or $1 billion in 1 year, the last 2 years I'm talking about. So that creates pressure on the supply of dollar. So when there is a huge mismatch of dollar and supply of dollar, then you naturally the rupee depreciates. Please remember, when the oil prices go up, then there is also an impact on inflation. And the rupee exchange rate with dollar is also influenced by the inflation level, the inflation differential between what is the inflation rate in India and what is the inflation rate in the US. So therefore, there are many other factors that impact the price of rupee vis-a-vis the dollar. And when that happens, then we say that our exports may earn us more rupee, but since our imports are much more than our exports, our economy becomes more prone to a bigger inflation shock.
I have a quick question for you. What is the ideal price for a barrel of crude for the Indian economy?
Well, in that sense, there is no ideal price. What we can say is this: a price that the Indian economy can absorb in the current situation. You have to see how the government looks at that, what will be its ability to bear that shock. And that number is around $70 per barrel. Now, all the budgetary calculations on subsidies or import bill and everything is coinciding with that broad number between 65 and 70, $72 per barrel. As long as the crude oil remains in that level, then there is no need to subsidize the oil companies. There is no need to reduce the excise duty on petrol or diesel. Things can go on in the normal course. So that would be probably the ideal number for.
This is something that surprises people. People assume that the lower the price of crude oil, the better it is for them. But a lot of economists argue that it is not so straightforward.
It is not.
So what is the ideal oil price band? You said $70. So are we saying that $60 per barrel would probably not be good for the Indian economy?
No, it is not. It is not that. If it is $60, then the oil companies make more money. They pay more dividend to the government. They can invest more money in more maybe exploration or more refining capacities. So the system definitely benefits if the oil prices are lower. And if the oil prices are higher, there is less money available with the oil companies, less money available with the government to invest in various projects.
What is that level at which discomfort becomes a serious macroeconomic challenge for the economy?
Well, anything above 90 is a problem. Anything above 90 or what it was around 100, it was a problem. The oil market has also undergone, a dramatic change. There was a time when we were dependent on West Asian oil in a big way. But in the last couple of years, particularly since the Ukraine war, our dependence on the Russian crude oil has increased. Believe it or not, today we depend on Russian crude oil to the tune of around 38 to 40%. Now it had come down because the US fear, threat of sanctions and all that, come down to 33. But once again, since the sanctions fear have gone, once again we are importing to the tune of 38% of our total crude oil comes from Russia. And Russian crude oil has got a slight discounted rate than what is the prevailing market rate. So the oil market has also undergone a qualitative change. It is still a problem. We need to reduce our dependence on imports, but it is a different kind of a problem now.
Another aspect of the situation in West Asia is the millions of Indians who actually work there. And those remittances matter to the Indian economy, that trade also matters. So, would weak oil prices also affect us through that channel?
Well, for remittances, Ankur, it works two ways. One is that when there is a war like this, when there is situation is uncertain, there is a tendency, human tendency, to remit more money back home. And this is exactly what happened in the month of April and May, as Business Standard also reported. Now, there's another element that happened this time. The rupee depreciated to a point of 95, 96, 97. Now, the moment there is that depreciation higher, when they send dollar back home, please remember the recipients in India don't get the dollar. They get the rupee equivalent. And the rupee equivalent suddenly got bigger. So there was that tendency to remit more money because to book the advantage of a weaker rupee. So both the things have actually helped India to. So the current estimate suggests that even in the current year, we may probably have almost 141 or 144 billion dollar of remittances, which is money that comes in, helps bridge our external sector deficits.
There is this notion in India now that since we are a large economy, we are less vulnerable than we used to be. But this rather comforting assumption gets tested every single time there is a oil price spike. Do you agree with this assumption?
I think we haven't taken the necessary steps in addressing our energy vulnerability. There is no doubt about this. We somehow have come to believe that oil prices go up, they come down, which has been the case so far. As I mentioned, in the 1970s and the early 1980s, we did manage to increase our oil production. But this time, I would say that from 2014 to 2021 or 22, oil prices came down. So we are comfortable and our oil import dependence increased. But after this shock, I'm happy to inform you that some decisions have been taken, like the tripartite agreement between Assam, Nagaland, and India, the central government, to step up exploration of oil. That's a zone which sits on almost 22% of India's total oil reserves and 15% of gas reserves. Now, since there was the dispute between Assam and Nagaland, and mind you, it is a strategically located area, China on this side and Myanmar on the other side. So if the dispute between Assam and Nagaland can be resolved through this tripartite agreement and exploration work can be speeded up, then I would say that in the next maybe 10, 15 years, we may not see the repeat of the kind of problem that we face this time with higher dependence on crude oil imports.
For decades, energy has been the most strategic resource globally. Things seem to be shifting a little now with geopolitical battles being fought over technology and in the recent times, artificial intelligence and its exports getting stopped because of geopolitical reasons. In India, we have seen this film before. You may remember the time that cryogenic engine
Yeah.
and the supercomputers were denied to India,
Yeah.
and we learned to build it. Do you think we're seeing the same thing again?
Well, I think it's not the same thing, but certainly technology seems to have been weaponized by governments.
Would you like to just remind our young viewers of what happened back then with cryogenic engines and supercomputers?
Well, for example, we didn't have access to a supercomputer. And importing it meant overcoming many of the controls that were enforced, that were put in place. So even for what I would call non-strategic purposes, like weather forecasting, I mean, the access to a supercomputer became a luxury for us. Those days, of course, supercomputers were huge and large. They should occupy an entire room. But I remember the huge celebration, big front page newspaper headline used to be when the first supercomputer arrived. And it arrived after considerable, consultation, negotiations, conditional. So I think we have gone through that stage, and today we are seeing the latest, artificial intelligence model being withdrawn from anybody who is not an American.
Including non-Americans working in the same companies in the US.
So now it's a new phase where technology is being weaponized, and I'm just wondering, where will it lead us to? So far, we have not. India as a country has not focused, apart from the exception of Sarvam, not focused on building artificial intelligence models within the country. We are focused more on creating use cases, and creating a kind of an AI public infrastructure. But I think a time has come where we start looking at how we can use our natural advantages to counter this trend of technology being used as a weapon. And for example, is it possible for India to use data as a tool to negotiate terms with other countries? India is sitting on a huge amount of data. So is that data a tool for India to negotiate terms with those countries who are not giving us technology in certain areas?
Wasn't this the lesson that we learned in the 80s and the 70s and the 90s, that, if they're going to deny you technology, you build it on your own? And, the Americans have been doing it, let's say, for similar reasons with China when it came to certain chips, semiconductor chips. And now this technology has become the latest frontier.
Absolutely. But please remember that in the past, such instances, we understood the message, but I think action was not commensurate with the kind of lessons that we drew. So we did, for example, in the 1980s, we created a Semiconductor Corporation of India in Chandigarh. Now, what has happened to that? It's now been privatized, it's gone to some private company, but we don't hear much about that. We are into the chip manufacturing. We have made some progress, but there's a catch-up going on right now. On artificial intelligence models, building LLM models, we are still a long way, far off from where we should be. The question is that can we expect that high technology will have a movement in favor of open source technologies? I don't know. The Chinese have produced some open source technology in artificial intelligence. DeepSeek is one of them.
So, a lot of this discussion seems to be about China. So, in a way, artificial intelligence seems to have become the strategic technology of 21st century, just like nuclear technology was in the 20th century or space tech was during the Cold War. Is artificial technology the same now?
It's not the same. It's become a major tool for even for strategic independence, strategic negotiations. If you have the combined might of AI and the data, I think you are a powerful force today.
Another thing that has become important in recent times is the term technological sovereignty. Can you explain this to our viewers?
Well, what is happening is that can your technology uh, be be an instrument or a tool to maintain your sovereignty on strategic terms, in a sense, the independence of taking decisions. Now that's become very critical, and which is why we are discussing how artificial intelligence needs to be nurtured in our own country, and not just we need to just test use cases and see that how wonderfully they can enhance and improve our productivity, but we also be owners of some of these artificial intelligence models.
Should we be worried about becoming too dependent on technology that we cannot control ourselves? Because the world seems to be getting divided into technological blocks now. So, post Cold War, we had a situation where globalization enabled the spread of the same technology everywhere. Now we seem to be reversing that position.
I don't think that we should stay away from technology. I think the march of technology is unstoppable, and we have seen it in the past. Maybe the strides now are longer and faster, but it will be foolish on our part to remain in self-denial on this front. Sooner we recognize this march of technology, embrace it, and build newer use cases and build your own technology models. I think that is the right way forward.
I want to ask this next question carefully. Looking back at the last 3-4 years, do you think it was a mistake for India to not have focused on its own frontier AI models?
I think looking back, it was not the right step, but all is not lost in my view. There is always the advantage of starting a little late. There is catch-up opportunity there still. We have the talent, one of the world's biggest reservoir of IT talent. And as you know that, particularly in design aspects, we have some of the best resources. So it's important that we must refocus our energies on that, and the kind of technology war that seems to be launched by some of the countries. I think it is an opportunity for us. You might be able to tap into some of those human resources from different countries, and they might like to develop those models and help develop those models in India. So I am an optimist at heart. I believe that what is happening globally is probably an opportunity, but then the opportunity will just go waste if we don't grab it with both our hands.
One argument that we have also heard in India is that we couldn't realistically compete dollar for dollar with, let's say, an OpenAI or a Google or an Anthropic, and therefore we should have focused our energies more on open source AI, which China did. Do you think that was a missed bus?
I could agree with you more on this. I think we should have gone in for open source AI. They may not have given you a great commercial model, but an open source technology with the diverse use cases and the kind of country we are would have been more inclusive and more sustainable.
Moreover, Indian tech leaders have in the recent past said and propagated this view that instead of focusing on foundation models, we should be focusing on application layers on top of those foundation models that others may develop. Do you think this was more a case of strategic complacency on
I think,
their part?
I mean, as long as the foundation models are available to us in good time. Now, if you do not have those foundation models with yourself, then how do you build layers and layers above them? So it is important that we refocus our energies in building those models here.
So, if we were to have this discussion 5 years from now, what would be success looking like then for India, realistically speaking?
Success would be if we have developed, maybe amplify the servum kind of success, manifold, and build a kind of a core sufficiency in your own AI models instead of simply relying on what is available in the global marketplace. Equally important, develop these models on an open source basis so that these are considered as public good instead of seen as assets created by commercial entities for profit.
Before I bring you into the next discussion, I want to set up briefly two viewpoints that have been expressed by leaders in artificial intelligence globally. One is the chief executive of Anthropic, Dario Amodei, who has written a long post where he has basically argued that because AI is evolving at such a fast pace and it has reached a particular level which could have a negative impact on labor markets, on economies, and various things, and various other fronts in the society. So his viewpoint is that because AI is evolving faster than legislature or governments can keep up with it, there is a need to set up some framework for regulating AI. Because there is a reason behind it. Legislature or governments regulate stuff in a more deliberative and slow manner so that they don't make mistakes. And that goes against the very system that AI seems to be, or ecosystem that AI seems to be evolving into, which is very fast. Next week, something different may have come up. And these are genuinely powerful technologies. The other viewpoint has been expressed by Satya Nadella of Microsoft, who wants a thriving open AI ecosystem to remain. Otherwise, these frontier technologies may not have an ecosystem to rely on. So the argument is that yes, everybody agrees AI is genuinely powerful, even as powerful as, say, nuclear weapons, which is what Dario Amodei says. He says AI should be regulated the same way we regulate nuclear technology or pharmaceuticals or aviation. Are we getting into the weeds here as far as regulation
No,
is concerned?
I think it's a very important debate that you have raised. It's a very important issue. I somehow feel that this is not an issue which should be debated and discussed in binary terms. A time has come where we should not just be discussing and debating that, oh, there need to be regulation and or let it be free. I think a time has come that where there is greater need for public-private partnership in this regulatory affair. Nobody is denying the need for some guardrails, some regulation, but how well those guardrails can be created, some regulatory framework can be created without stifling innovation is the big challenge. And in my view, the time has come where probably a public private partnership approach is a way forward to resolve this very, very critical, significant dilemma that is facing humanity.
What strikes me is that probably for the first time in technological history, people who have actually built technology are saying that this is too dangerous and we need to regulate it. Shouldn't that make governments a little more cautious?
Of course, I mean, as you rightly pointed out, when was the last time that the manufacturer of a product or a service said, I don't want to release it in public domain. I want it to be first checked and tested in a limited environment, and that too among some top companies. So I think, yes, and that's why I'm saying that a time has come where the regulator and the stakeholder, the participants of this thing, should not be in two different compartments. A time has come that they should be actually part of the same process and help create a regulatory system of creating guardrails and checks and balances through a participative partnership process.
Through science fiction, a lot of people have read about scenarios where the machines take over the world. but the risk related, or AI risk as it is called, may be a little more immediate. It may be related to, let's say, labor market disruption. It may
Oh,
be
yes,
related to weapons. It may be cybersecurity or
absolutely.
misinformation
Absolutely.
or concentration of economic power. Which one of these do you think is the most dangerous?
I think the most dangerous is when AI model starts creating its own codes. Now, when they start creating their own codes, you do not know what that code is capable of delivering. So once you lose direct control over the knowledge code, this is something that Harari was actually talking about a year and a half ago, that the knowledge code that humanity had has probably already been hacked. Now that is the real danger. So therefore, it is necessary where the government as well as the industry in this area, the IT industry, the artificial intelligence players, they should come together and create a model of regulation through partnership.
In India, we've had a rather fraught relationship with regulation. We have swung between the extremes. So we either regulate too much or we just don't regulate at all. How should the Indian government or the Indian state deal with this?
Well, I think we need an open approach. There is need for more dialogue, more consultation, and I'm reasonably certain that India has the talent in industry, and there are some political functionaries in the even in this government who probably will recognize the risks and the threats implicit in the challenges that is being faced by the world. So I am worried as an individual, as all of us should be. But my sense is that yes, the way out has to be found out, and one way out could be a partnership model.
So, what is the bigger risk here? The government's over-regulating AI, or governments moving too slowly and then AI already changing the society before the rules are in place?
I think this is not an either or situation. Government over regulating is as dangerous a risk as not regulating. So the government must step in, but along with, in partnership with the companies, the artificial intelligence industry who are creating these models. Without the two coming in, I have a feeling is this, that we will have a situation where either it is left alone or it is not getting regulated at all.
Throughout our discussion today, one country has constantly hovered over this discussion, and that country is the United States of America. Whether it was the discussion on West Asia, whether it is the discussion on technology exports or AI governance, what does it tell you about the reach of the American power, that everything seems to flow
No,
towards USA?
I will quote Barack Obama here. There's nothing called blind optimism. And the world has seen far worse period and challenges in the past, even with the US playing all kind of games. There is no reason to believe that the Trumpian era is here permanently. After all, there will be a different president after 2 years. So I think, yes, we are going through a difficult time, a difficult era. Time is not yet ripe to lose all hope.
For years, there has been hope that the India-US relationship would deepen and broaden, especially after the repair work was done post the nuclear tests in 1998. Has that situation become a little more complicated now, the India-US relationship?
It had become complicated, but I see signs of change. For example, there is no reason for the US to announce that they are going to send a high-level delegation at the end of this month to conclude India's US trade negotiations, number one. There is no reason for Iran to decide that they will announce their decision that they have signed a memorandum with the US through their office in India. So in that sense, I don't think it would have happened without US coming to know of it. So to believe that US and India's relations have soured to a point that the two are walking on different, independently in different paths, no, I don't think so. I think it has gone through difficult times, but there are early signs of the two countries coming closer to each other.
We have long cherished strategic autonomy in India. We've long spoken about it. Do you think AI complicates that situation and that aim?
Well, the strategic autonomy will certainly be challenged. That concept of strategic autonomy, provided we don't allow our leaders, that leaders of two countries, to deal with these issues in a model, through a model that gives scope for decision making to both the stakeholders as well as the political executive.
But the world seems to be getting more competitive when it comes to energy, technology, and intelligence. What should India's objectives be?
Develop develop a sector that can be your liver. We need to develop a liver by which we can exercise our influence. And I think in this world of technology, data is our liver, and probably a time has come where we need to use what RBI did some years ago with the data localization. And I think a time has come where India recognizes the importance of its data sets and use that as a lever for negotiations, discussions, partnerships on the technology front.
AKB, thank you very much for joining us.
Thank you.
For much of the 20th century, power came from controlling energy. And as we've discussed today, energy still matters enormously. But another contest is now underway, a contest over technology, computing power, and artificial intelligence itself. The questions we've discussed today don't have simple answers, but they will help shape the world India operates in over the next decade, from energy and geopolitics to technology and artificial intelligence. We'll keep trying to make sense of those changes, one conversation at a time. I'm Ankur Bhardwaj, and this was Macro Matters. See you in 2 weeks.